Should you invest in the stock market in 2020 or should you wait 2020 out and stay on the sideline? That's what we're talking about here today, guys. If you're new here, I am Jeremy. This is a financial education channel. And today I'm going to tailor today's advice based upon how much experience you have in the stock market and how much money you actually have in the stock market. So we're going to go through, like, if you have 6 figures in the market, 7 figures, 8 figures, if you're like have between $10,000 and $100,000 in the market, which is a majority of people I've found that watch the channel have between like $10,000 and $100,000, or if you're really like brand new to the market and you don't have that much wealth and you have less than $10,000, because the truth is, if you have $1,000, you should approach it differently than if you have $1 million. If you have 10 years of experience in the stock market, it's different than if you're brand new to the stock market. And so if we're talking about should you invest money in the stock market in 2020 or should you wait 2020 out, it's gonna depend on how much money you have and how much experience you have, because it's not just like one suit fits all and it's like, oh, do this. No matter how much money you have or no matter how much experience you have, no, okay? It's very tailored advice today that I'm gonna be giving out there. So I hope you guys enjoyed today's video. Make sure you smash the thumbs up button and let's start getting into this. Alrighty guys, first group we're going to talk about on if you should invest in the stock market in 2020 or wait is the people that have a good chunk of change, okay? Those of you that have 6 figures, 7 figures, 8 figures, we're going to do some rich privilege today, okay? You get your advice first, and the people with less money, you know, we'll put you down the line, okay? This is like the Titanic. Remember the Titanic? They didn't even let the poor people off the boat, man. That was so wrong. Like, thinking back, the Titanic was so messed up, man. But anyways, 6 figure, 7 figure, 8 figure people that are watching this video, okay? If you're new to the market, dude, take your time, okay? Take your time. There's no reason to rush in the stock market and rush all your money in the stock market in 2020, okay? If you've got a considerable amount of wealth, and this is actually the group I worry about the most, okay? Because what ends up happening is some people like have, you know, done good in business, or they've saved a lot of money throughout their life, and they're like, now I want to invest in, so they look into the stock market and they come across my channel or other channels and they just get real excited and they read some stock market books and they're like, let's go, let's get ready to invest, and they're so psyched up, okay? And the problem with that is, you know, you can make some big mistakes, okay? When you're in your first year of investing, first 2 years of investing, usually you're gonna come across some of the worst stocks in your first year or two of investing. Like, I remember back to my first year or two investing, like most of the stocks I had found those first 2 years either had almost no growth behind them or were like speculative stocks. And so if you're newer to the stock market and you got a good chunk of change, like, don't just rush in it, because I'm telling you, some of those stocks you're gonna find, because you haven't really researched that many stocks, so the stocks you come across, you're gonna think they're like really good stocks, and I can promise you, they're probably some bad stocks or not your best stocks, okay? If I look back to like my track record, like I didn't start finding some good companies till like the end of year 2 or into year 3, okay? So you don't wanna make a mistake and like you got $1 million saved, you put $1 million in and you lose $250,000 real fast or something like that, okay? Take your time with investing, deploy your money strategically, don't just rush it all in the market or once or something like that, okay? Number 2 piece of advice I would give to those of you guys that have a good chunk of change around investing in the stock market in 2020 is have cash ready to go, okay? There's probably going to be some volatility in 2020. We got a lot going on in 2020. Possibility of maybe a trade deal, maybe not a trade deal. We have economic uncertainty in a lot of markets around the world, as well as we have seen some industries in the US slow a bit. So we don't really know what could happen in 2020 in terms of the macroeconomic landscape, as well as we do have a presidential election in 2020, and that could have ramifications in itself, okay? There's a lot of craziness that's going to be going around that, and possibility of tax changes coming into the tax code, maybe not, maybe Trump gets in another 4 years, maybe the stock market likes that, maybe the stock market doesn't like that. So needless to say, like, there's probably going to be a lot of volatility in the market, and volatility creates a lot of great opportunities and a lot of great companies, and just in the market in general. When there's volatility, generally the ones that have cash ready to go and can deploy that cash strategically out there, take advantage of all those great deals. I'll give you a great example. November and December of 2018 were really rough. They were really volatile times, and I had a good amount of cash. I always keep 10 to 30% of my money in cash. And going into like that November, December timeframe, I think I had 25 or 30% of my wealth in cash. So throughout December, I was able to plow a lot of money in the market in my different accounts. I had cash ready to go, and I got to take advantage of a lot of great deals. And so those of you guys with money, money, make sure you're keeping some cash on the sideline ready to deploy if we get some volatility, okay? And the last piece I would say for you guys that have money is cash flow is nice, okay? If you got a lot of money and you can put a lot of money in the stock market, don't forget, like, cash flow is nice. It's not just about getting the next stock that has a chance to 10x over the next 10 years. It's also about those cash flow payers, those dividend payers that can pay you a 3% yield, 4% yield, and have some, exciting opportunities in front of themselves over the next 5 years, 10 years. But getting that cash flow and reinvesting that cash flow, if you got a lot of money in the market, it's definitely, a great thing to take advantage of. In 2019, that's been one of my biggest focuses is, I kind of looked at my portfolio going into 2019. I was like, I don't own enough dividend stocks. And I've kind of, added more and more dividend stocks because that cash flow is nice. You get those dividend payments coming in from those dividend stocks. You go ahead and redeploy that money out into new stocks and other stocks or the same stock. And you go ahead and just keep building that money and building that money, okay? So that's for you guys that have a good chunk of change, okay? Now let's get into you guys that have maybe between $10,000 and $100,000 in the market. Alrighty guys, now let's talk to the group that has between $10,000 and $100,000 out there worth of wealth that you can maybe possibly put into the stock market, or maybe you already have in the stock market at this point in time. Let's talk about if you should invest in the stock market in 2020 and whatnot, okay? So if I'm thinking about you guys, I'm thinking about three different things, okay? The first thing is make sure in 2020 you're staying diversified in different industries and different stocks, okay? Make sure you're not just investing, because let's say you hold 10 stocks, but they're all in the same industry. That is not really being diversified, okay? If you own 10 semiconductor companies and those are your 10 stocks, you're not diversified, okay? You're all in like the semiconductor industry. Make sure you're diversifying your money around. And for you guys out there that have this amount of money in the market, a lot of times when you're building up from this group and you get over to here, a lot of times you guys just don't think about diversity because you kind of were thinking about you had a smaller amount of money and like it was like, who cares about getting diversified? Then you start building up, all of a sudden you have 20K in the market, 30K, 40K. Okay, now let's start diversifying a little bit, okay? Let's make sure we have some wealth in different industries. Let's start building out a real portfolio, okay? And a real portfolio isn't, I have all my money in one stock or two stocks or something like that. It's making sure you have your money diversified across, there's a lot of great stocks out there, okay? Let me just say that. It's not like there's just one stock that's like, this stock is the best stock ever. There's a lot of great stocks. There's some great dividend payers out there. There's some great growth companies. There's quite a few. And there's some great value stocks. Make sure you're taking advantage of all three of those and diversify your wealth. But make sure also you don't over diversify your wealth. Sometimes I see people, they got like 30K in the market and they own 35 different stocks. It's like, how are you even supposed to like stock 35 even remotely close to as much as like stock number 4? It's like there's a point where you can get way over diversified and you have a bunch of pointless stocks that, like, trust me, there's not really like 35 great stocks to buy at a particular time. A good portfolio is generally anywhere between like 7 and maybe like 15 stocks or something like that. When you talk about 35 stocks, 40 stocks, 50 stocks, at that point, just buy an S&P 500 index fund or something like that because you're getting way too diversified. And if you're going to play like that crazy a diversification, at that point, you might as well just buy an S&P 500 index fund and forget individual stocks because that's too much, okay? So let me say that, okay? Number 2 point I want to bring out is make sure you guys also are keeping some cash. Not just the folks that have a lot of money. Make sure you guys are always keeping 10 to 30% of your wealth in cash, okay? 10% when there's a lot of great deals and you're buying stocks like crazy, and 30% when there's not that many good deals and you're like, dang, I'm having trouble finding good stocks right now. You can get it all the way up to 30%. You guys also want to be able to take advantage of any volatility in the market, which 2020, as we spoke about before, could be a very volatile year. It's definitely setting up like it could be a very volatile year with the presidential election, like we talked about, with everything that's going on with China and the US and macroeconomic landscape in general. It's setting up to be possibly a very volatile year. So make sure you have some cash on the sideline ready to deploy, ready to take advantage of huge dips in the market and huge dips in certain stocks that are great companies. And when the market dips huge, it doesn't matter what stock it is, they all get hit, okay? If I remember back in December of 2018, there wasn't I think other than maybe Tesla stock was doing good at that time. Outside of them, like every stock at that particular time was getting nailed and there was just deals everywhere. And sometimes that's going to happen, and that could very well happen in 2020. So make sure you're keeping some cash ready so you can, deploy that out. And last thing I'll say is, 2019 the market's moved away from a lot of the growth stocks. The market's kind of said, we don't like you growth stocks as much. We like the dividend payers now. We like the value stocks. We like the safer stocks, okay? So 2019, the market, you can just tell, like look at a lot of the growth stocks. Look at a lot of the stocks that are producing 20%, 30%, 40% plus revenue growth. The market's moved away from a lot of those, and the valuations have come down considerably on many of these stocks. There's still a few that are super high flyers, but the majority of them I'm looking at for growth stocks that maybe don't have positive earnings yet or something like that, the market's moved away from a lot of those stocks and said, we don't want you anymore growth stocks, okay? So with that being the precedent that's going on right now, if that continues into 2020 and a lot of these growth stocks continue to get hit, that's going to produce some great opportunities out there, and this happens in the market sometimes. Sometimes the market, you know, overvalues like the safety stocks, right? And I see that with a lot of these safety stocks right now. A lot of them are overvalued, trading at way too high of forward Ps, you know, 23, 25 forward Ps, and their businesses are in decline or like very stagnant. And I'm like, it's ridiculous. And then sometimes the stock market just like, you know, puts growth stocks to the sky. You know, 2014, I remember growth stocks were just flying high. And as long as it had growth, like everybody wanted to be in it. And sometimes you just get in that type of situation in the market. But 2019, the market's pulled back. You're looking at a lot of great growth companies that the stocks have gone where? Down, down, down. We've even seen in the VC land where a lot of these valuations of some of these private companies have come down considerably, okay? And sometimes you have an overreaction where the prices fall too much, and that allows you to take advantage of some of these great companies that are, you know, high growth players and will continue to grow, you know, 10, 20, 30+% for years to go in the future, okay? So be ready to take advantage of some of those opportunities as well, okay? Now, lastly, let's get into the last group, which is the people that have under $10,000, okay? Now, I don't even need to take a break for you guys because there's one thing that is very important for you guys that have less than $10,000, okay? Doesn't matter what's going on in the macroeconomic landscape. Doesn't matter if the stock market's high, the stock market's low, the PE ratios are high, low. For you guys, there's one thing that matters and one thing only, and that is experience. For you guys that have a smaller amount of money, you need to get in the market and get experience. If you got $1,500, that $1,500 is not going to magically change your life for the better or for the worse. No matter if you make it into $3,000 or you lose it and you lose it down to zero. That money doesn't change your life almost at all. And if that money does really mean that much to you, then you shouldn't even be focused on investing. You should be focused more on like how do you get a better job, how do you create passive income streams and things like that, okay? But the bottom line is for you guys out there that have a smaller amount of money, you absolutely need to get experience in the market. And you know when the best time to get experience in the market is? When the market has volatility, when there's things going on in the market, and when you have a smaller amount of money. Remember I talked about, I always worry about these folks, because these folks, if they lose 50% of their wealth, it's like the end of the world, right? If you lose $500, it really means nothing. But if you lose $500,000 and you got $1 million, that's like the end of the world for you, okay? It's a way different mindset when you're talking about, like, I would much rather lose $500 when I'm 19 years old than I'm 45 and I've been working my butt off and I just lost half my wealth, okay? I'd much rather lose some money at 20 years old than lose money at 50 years old. Let's put it that way, guys. And so the best time is right now. If you got a smaller amount of money, get in the market. And who cares if the market crashes, the market has a dip. The fact that you get to go through all that is the best thing ever for you. The worst thing ever for you is staying on the sideline, not experiencing all that. Yeah, you know how valuable the experience is if you got, you know, $1,700 in the stock market and you're going through all the volatility of it and you're investing and you're buying stocks and you're like going through all that. It's extremely valuable because you've already been through it. And then whenever these situations happen in the future, you're going to know how to handle it because you actually have experience doing it. You didn't just like read a book about something. You weren't like, whoa, in the 2008, 2009 recession, like this thing happened or something like that. You don't get real experience like that. It's like practicing a sport versus actually playing a game in a sport, right? You can practice all day, but you don't really know how good you are or not good you are until you actually get in the game. So for you guys, all about experience in 2020, building up your experience, getting more of that, and whatever happens, whether the stock market's flying high in 2020 or whether the stock market's crashing in 2020, for you guys, it is all about that experience and getting that experience, getting that confidence built up, going through the ups and downs of the market, going through the ups and downs of stocks, and just getting that experience. Trust me, it's the best thing ever. I started investing in 2008, 2009. It was a crazy time in the stock market, and I wouldn't take it back for anything. I had a smaller amount of money, it was great to go through those ups and downs with the market. The market was like all over the place. I wouldn't like trade that for anything. That was such valuable time I spent in the market because I actually went through that, actually experienced that. And for those of you guys that, you know, are like, I got $700, I'm just going to wait on the sideline until the next crash. Who knows when this will be? Could be this year, could be next year, could be 5 years from now, could be 10 years from now, and you're not going to have any experience. Like, it's best to get the experience, get that under your belt. Then you have less anxiety about when the next crash happens or something like that. A lot of people are like so scared about when the next crash. I'm not scared at all. I'm ready for it. Whenever it comes, it comes. I'll always have money on the sideline ready to go, and it is what it is, baby. Let's just rock and roll. So, you know, you just get that type of confidence once you've been through the ups and downs of the market. And if you're not getting experience, you're not going to have any confidence. That's the bottom line there, guys. So I hope this helped everybody out. You know, no matter if you got a small amount of money, you know, a decent chunk of change, or you got a lot of money in the market. Doesn't matter where you're at. I hope this video definitely helped you guys. Make sure you smash the thumbs up button. Leave me a comment down there in the comment section. I'll try to respond to some of them, all right? Thank you for watching. Have a great day.